Welcome to FinanceFeeds Podcasts. FinanceFeeds is the world's premier interactive Forex industry news source, providing the latest insights and current affairs from within the online trading industry worldwide. Enjoy our latest podcast episode. Hi, everyone. Welcome back to another episode of FinanceFeeds Podcasts. My name is Nikolai Isaev. I'm editor-in-chief of FinanceFeeds. Joining me today is Torben Friis, who is Managing Director at Liquidity DMCC. Torben, thanks for joining us today.
My pleasure. Thank you for having me.
You're welcome. Torben, I think you're very well known in the industry, but for those people in our audience who may not be familiar with you, can you talk a little bit about your professional background and history and where you are today at Liquidity?
Sure. Thank you. The journey for me started back at Saxo Bank in 2001. Saxo Bank at the time being one of the pioneers together with IG, CMC, and a few others who were pushing forward on putting online trading out towards a, let's say, retail audience. Previously, people who had been trading these kind of instruments like foreign exchange or commodities, whatever it might have been, would either have been wealthy individuals who did it via phone broker or something equivalent. But the online component totally changed that mechanism. And I had the pleasure of working directly for Kim Forney and Lars Seier Christensen, the two founders of Saxo Bank. And then through that, I then also had the opportunity for moving on to as a manager in Lugano, Switzerland. That was an experience that was 25 years too early on the CV. And then after realizing that, I moved on to London, where I was just under 6 years, helping setting up IG in Europe, IG Group, and also working for as insightful people like Alex Pusco at Active Trades. And that was, very interesting because this was the time at which the MetaTrader, let's say, adoption amongst brokers and the explosion in brokers took place. So it was a fascinating time to see how aggressively this whole thing was growing. And then in the subsequent years to look at, I also tried something else for a period of time where I, together with some wealthy contacts from Kazakhstan, we wanted to build a retail empire with the big brands like IKEA and H&M and those guys. And we did different things to that extent, but I understood also how hard a physical business is versus a real business. And for that reason, it was more attractive for me when I was offered to run a family office back in 2018, which I still do, to then say goodbye to retail, kind of shopkeeper business, even though it was owning a chain. And then focusing on that stuff. And that's also how I got back into the financial industry now, where, we got involved with GCX, good old Lars Holst, also a former boss of mine at Saxo Bank 20 plus years ago, and then getting to learn a lot about crypto. And over to the fact that the gentlemen at Liquidity, the two owners, they asked me, because I know them from back in London, if I would like to help them handle the whole distribution side of the business, because they needed somebody with my pedigree, and they came up with a solution which was attractive to all parties, like a kind of a partnership, and here we are today.
It's a very interesting story. I'm intrigued by the fact that you sort of left the brokerage space right after what I would call them the wild days. I was part of the industry in the, let's say, mid 2000s, right, when it really started to explode. And there was definitely a lot of hyper growth for companies around the world. But the fact that you left the brokerage industry and kind of ventured into something that's more maybe commercial, right? Sort of like commercial products, right? And that's, I guess, a completely different animal to handle. And then you came back into the financial services space. That's very interesting.
Well, the truth of the matter is, and I still believe this today, I believe that there is, unless you are a top 20, top 30 kind of, let's say, operator. I'll give you a good example. Somebody like XM.com, very large brokerage. I had the pleasure of being for a very, let's say, quiet dinner with the founder, Dassos, at his private residence in Dubai. And we had a nice talk about it. And it's very clear, once you are below that level, inside the top level in the triangle, the CPA, the cost per acquisition in the marketing funnel just becomes so hard. And, he's an expert in marketing. And we were just, on a piece of, on a napkin doing some numbers on it. And it just became very clear how hard the competition has become. So like when you were talking about the heydays 20 years ago, and then let's just turn the clock back 15 years ago or 10 years ago, that window of opportunity has entirely closed by now. And anybody who wants to set up a brokerage, they will understand that the capital they will need to allocate, the compliance and operational costs they will face, the risk of attracting toxic clients, both in retail, corporate, and wholesale, are very high. So for a lot of these people, I think that it will be a very, very demanding feat to try and get into that. And that's perhaps also why you're seeing a lot of people who have, let's say, cut their teeth in foreign exchange, CFD, retail brokerage. They are moving into things like crypto, or some are even moving into the payments industry. I've seen quite a few former colleagues who have decided to venture into that because they are being offered relatively attractive roles with high pay, and they can utilize their Rolodex from past roles at other companies.
Yeah, absolutely. Makes a lot of sense. And you're right. It's very cutthroat competition these days amongst the top brokerages in the world, and then the smaller, medium-sized brands that we all know. So let's see what happens in the next few years. It's actually interesting to see if there's going to be further consolidation, as there has been in the past, or what the playing field will look like. But I think we digress a bit. I think you and I can discuss. We could have a separate podcast on this topic. I think I wanted to move on a little bit and ask you about your current role as head of distribution at Match Liquidity. Your remit is to handle relationships with liquidity providers, counterparties, vendors. How have these relationships and dynamics evolved over the years? Maybe, when you were first in the industry and then when you came back.
Sure. Well, I have naturally stayed in touch with a lot of people throughout the years because, some of them are private friends, and they would often give me a ping about what's going on as gossip. I was also on several occasions, even after leaving the industry, contacted by very large specialist consultancies who needed an expert. I got pulled in by Bain Capital, Boston Consulting Group, all these kind of guys who were still looking to try and do M&A in the space, where I was like, you guys are crazy. These kind of numbers you're looking for, they are not there. So to your question about how, let's say, the arithmetic of the industry has changed during the last, let's say, 15 years, what I really have noticed, going back to what I was mentioning earlier, is how aggressive competition has become. So you were talking about kleptomanic kind of structure there is around it. There is not a lot of fresh blood coming into the industry in terms of, let's say, new clients against the existing structure you see in terms of number of brokerages out there. So you need to have this kind of Coca-Cola style special sauce. So if you look at it, to my understanding and what I've seen out there, the LP side, banks don't want to deal with anybody anymore unless they really have banking pedigree. And that is whether you're a direct client or if you go somebody like Hidden Road Partners, HRP as a prime broker. Likewise, if we look at something like the crypto industry, in terms of the liquidity providers over there, they have also raised the bar because they understand that even though they are facilitating trading relationships with no commission, well, they still need to make money on the flow. So most of the big boys, they don't want to speak to somebody who at least does not do $10 million of volume with them per month. And that is naturally somebody where there can be no KYC or even KYT, know your transaction, KYT, issues relating to the business underlying, right? So I would say the bar has been raised significantly. People are also, let's say, much harder about talking business. They will have one or two chit chats with you and want to see some actual, let's say, trajectory in the onboarding, live trading, this kind of stuff. It's not like the old days where people would see, oh, I remember you from somewhere. If we're talking about Forex and CFDs, it's very cutthroat these days. Crypto has much more that kind of a feeling from FX and CFDs, these kind of arrangements 15 years ago, where salespeople are much more gentle because they understand, A, if they get you on board, margins are sky high, and B, there are not that many fish out there. So they just have to be more careful. Whereas in FX and CFDs, they understand it's like a kind of a closed circuit. So They just don't care. They're just like, okay, if this is not the guy, then let's find the next one.
Yep. I wanted to talk a little bit about gold because, as far as I know, gold is in very high demand with at least retail investors in the industry over the last probably several years. And, I've noticed that gold accounts for nearly half the volume for a significant number of FX and CFD brokers. But there's quite a mismatch between the leverage they offer, which can go up to, let's say, 200 to 1, and PBs or prime brokerage's margin requirements about 12.5 to 1. I was wondering, based on your expertise, what are the consequences of such a mismatch from a liquidity provision standpoint, like hedging the flow and the overall health of brokerage firms today taking on so much volume?
Well, the first thing we have to be conscious of, as always, when looking at leverage is, of course, the fact that leverage is a symptom of what customers really want and which effect that will have on the broker. So if there's a broker out there who's offering 200 to 1, it's not because they don't expect the customer to be winning, because as you were just pointing out yourself, the ratio they can get with a prime broker or a direct banking relationship will at best be 20 to 1 in an extreme scenario, 5% margin, right? So, and as you pointed out, sometimes it's as high as 8% margin they have to come up with. So what happens in all of that is, of course, that the retail brokerages naturally do this because they understand a lot of customers on the retail side are using it as a method by which they are betting, like an online bet on is, Chelsea going to win against Manchester City kind of thing. And if the customer gets it wrong, which they naturally do mathematically very often, because the volatility in the price movement means that if the price just moved against them, let's just say 200 to 1 equals 0.5%, right? And the brokerage will then most likely have a stop out policy at half of that, which means 0.25%. So if the price volatility is 0.25% against the customer, then the retail customer will naturally be wiped out. Let's say, for argument's sake, that the price, for some reason, stays the same during the next 24 hours. Then naturally the broker has the next advantage that if the customer is long, they will have to pay swaps, financing fees. And that naturally, again, also dilutes the customer. So in the total perspective, if you ask logically, the reality of the matter is the brokerage will have to, as a market-making function and a risk element, to filter their customers between who are winning and losing customers. And most likely all losing customers, or a lot of them, will be in the 200 to 1 bracket. And then the customers that apply less leverage, they are most likely looking for a netting effect of that. And I think your question is how much of that netting effect is really kicking in versus the flow that brokerages are hedging these days. And that is naturally a question of how is that customer base put together? Because the more institutional a base you will have, somebody will perhaps go short with you because they feel you have attractive financing fees, and then they will hedge themselves out by going long somewhere else via futures, or let's say selling options or buying options in the relevant direction. Let's say if they are short with you spot, they will naturally buy call options somewhere, or they will sell put options somewhere else. It depends on the model, but at the end of the day, the reality is, and that's also why I believe that the Forex and CFD industry is ripe for a lot more consolidation. There are a lot of brokerages out there that can't literally make it work. They have a big client portfolio that is potentially making money with high risk, let's say 50 to 100 leverage. And these guys, they're not able to hedge with prime brokerages. And for that reason, they are sometimes, especially in a market which has been range trading, I understand the gold has broken out significantly over the last few months. But prior to that, if we take something like euro dollar, that's just more or less trading that 107, 112 range. For gold, the new range might be 2,200, 3,000. If there ends being this kind of volatility, we'll see what the Trump presidency has to offer and that kind of stuff with their playing. I'm quite sure that regardless of what Jay Powell said, he's going to be told that he has to drop interest rates to zero round about January the 13th, the latest, And then you might see gold break out of that. But in general, the mismatch between retail brokerages and prime brokerage, in my world, is also an indication of how much risk they have to take on their books in order for it to work. And if they then don't have the necessary flow, going back to the conversation which I was referring to with Dassos, the founder of XM, then naturally they end up in this kind of scenario where we can't net a lot of this because we don't have a lot of opposing interests. So the only solution they then have is either to cheat and kick out customers, or they will end up warehousing this kind of risk that they will lose money.
I think those are some very, very important points that you just raised. And you mentioned Trump and crypto. I wanted to kind of jump into crypto a little bit. But since the election literally just happened, I was going to ask you, what are your thoughts on crypto adoption in the US going forward? I mean, Trump has said many different things that are positive, let's say, for crypto adoption in the United States. But I mean, besides Trump, there's what I call the blob, right, in Washington.
Yes.
Certain senators, certain members of the different branches of US government who are still skeptical about crypto. I was wondering if you have any thoughts on that.
Yeah, I think there are two things people have to remember in general about politics, and especially in the United States of America. Number one, lobbyism is, wherever you go in the world, a core element of modern policymaking. With that in mind, in the US, it is up front and center. There's no doubt about that policy making is the basis of very strong lobbyism by relevant groups. The best example was, of course, the fact that somebody like very senior people in Washington were involved with Sam Bankman-Fried and FTX before that whole thing blew up. There were outrageous statements on this about how secure that place was, whilst people were doing everything they could to throw somebody like CZ and Binance under the bus. CZ just turned out to be the real Kaiser Sose, the smartest guy in the room. In many ways, also the deals him and his team they cut with prosecutors, etc., etc. So, in conclusion, I think that crypto as such will be much more friendly in terms of the perception from a political and a legal point of view in the US. But I also want to put a note of caution. It has to be said that 95% of everything that happens in crypto, in my opinion, is absolute bullshit. There are so many rug pulls going out there, professional scams. I meet so many people out there who tell me, oh, I'm going to invest into this coin. It's going to make me money. I'm like, you fool. If you don't have a Ferrari and two other cars, you don't have, two houses, you can't afford to give a homeless guy on the street $1,000 or euros, don't buy this kind of stuff. If you believe that you want to go into Bitcoin or Ethereum, then do that. But all these meme coins and all this stuff, this is just, a feint of the moment. So I just want to say, as a concluding component on that topic, crypto as such in the US, I think you will have a more friendly component to it, also because Americans are often very fast when it comes to adoption. When the mainstream, they move into something. But I think at the same time, there will be that enormous challenge of the element of, let's say, illicit money, if you'd like, because there will also be a tax component to this, right? Mm-hmm. And that has been one of the main things that a lot of policymakers in Washington have been very opposed to, the concept that potentially crypto would be an electronic alternative to cash in an anonymous way. And that would allow people to just go from physical dollars to USDT or USDC.
Torben, thank you for those insights. I wanted to shift a little bit more globally and talk about crypto and focus specifically on Match Liquidity DMCC. I wanted to ask, how have you seen the demand for your services change with the rise of crypto adoption, let's say over the past year or longer? And has it been more retail or institutional driven specifically for you and your company?
First of all, we only deal with institutions because we are market makers. So we only deal with entities that will qualify as ECP, eligible contract participant or equivalent. But naturally, underneath that, there is naturally the question of, are they trading their own book or are they actually directing through retail flow? On the FX and CFD side, I'll be straight up with you. We have really been dialing that down. Going back to what we were talking about earlier, we feel the margins in that kind of stuff are not very attractive. Instead, when we have been trading principal to principal with a lot of guys, where they, for instance, wanted to learn something about the crypto side of the industry, the margins have been very attractive. And that is something that we really have seen has been driven by their retail flow. For instance, a lot of brokerages out in the world, they won't like that I say this now, but a lot of them, especially from emerging markets, naturally settle all their client payments in crypto. If it's from China, India, somewhere in Africa, South America, also because the speed of settlement is too slow, they all have these arrangements by which they can settle in USDT. And on that basis, there are some of them, they settle stuff, $5-10 million in crypto. A day, which is real money flow, like deposits on, in the old days, it would have been on credit cards or bank transfers, whatever it might be. That has all shifted to crypto. So there we have seen a significant flow from a treasury point of view, where some of these guys would like to trade with us, and we then buy some crypto from them, and we settle with them principal to principal. So that works really well. And a lot of them, they only want to deal with somebody like us, who is a classic entity, who is not a crypto shop, because they feel they are going to get into difficulties with their banks. So that's how we sort that out. The other element we've seen is that a lot of them are trying to understand where the next potential in this whole thing is going. So you will see brokerages, which, for instance, have these issues with payments against their client base, and then they're contemplating building out a payment arm. I mean, the best example is one of the largest retail brokers in the world, being IG out of London, hired good old Mr. Brian Corcoran, right, as the chief executive, who formerly used to be in the gaming industry at Paddy Power. And prior to that, he has also been, in the payments industry at World Remit, So you don't hire somebody as a CEO of a big billion-pound company unless you are actually going to go into areas where this person has some expertise from the past. And I would say that is definitely something that we are seeing is a very strong tendency in terms of crypto adoption. Going back to the 95% bullshit part, the 5%, if you ask me, the 4 of the 5% is pure payments flow. So people who use USDC, they use USDT as a dollar payment leg. And the others, 1 out of 5%, is people who want to have some sort of store of value. So they buy Bitcoin or Ethereum. That's more or less it. So in conclusion, on the retail side, it's mainly USDT, USDC for payments. And on the institutional side, it is sometimes also brokerages and financial institutions that actually buy stuff like Bitcoin as a hedge against inflation. Going back to your gold element, because Bitcoin they can buy for cash and they don't have to pay storage for it. Whereas on gold, they're going to be charged storage.
Mm-hmm. Yeah, it makes total sense. And going forward, what do you think are the main initiatives that companies need to think about for staying ahead of the competition when it comes to crypto as compared to other asset classes? You mentioned for you and your company personally, the FX and CFD business is not necessarily as attractive as it may have been previously. What is it going to take for, like you said, that 5% of genuine projects that are within the crypto space to take things forward? Because it seems like we had a crypto winter passed. This was several years ago. Crypto adoption continues. Trading in crypto products, the Bitcoins, the USDTs. We have major exchanges around the world, the Krakens, the Coinbases, having a legitimate and significant, I would say, market share, but also having a real global presence. But what is it going to take for the crypto side of the industry to advance forward? And what do companies need to keep in mind, or new initiatives that they need to start thinking about for the near future in crypto?
I'm going to blow your mind now, I guess. How? I think this is going to be a Jay Leno, Bill Gates moment about, the internet. My bet is that in a few years' time, going back to the whole leverage thing you were talking about, most people don't realize how much banks actually are involved with blockchain as a technology for the sake of mapping transactions. Most people don't realize that JP Morgan have their JPM coin and run their entire internal settlement infrastructure on this already, because it's much cheaper running that on program blockchain nodes than running huge server parks by Oracle or IBM. Okay? So that's the first step. And that will definitely also lead to the regulators are looking to how can they adopt this, because, and this is where people are going to go, ugh. The reality is regulators will eventually say each transaction that a brokerage undertakes, just like you have regulatory reporting on equities and other kinds of exchange listed products today, all transactions at brokerages will very high likelihood going to be required to be mapped on some sort of blockchain functionality with regulators. And that will, going back to your question about brokerages and what's going to happen in the future, going to wipe out all these brokerages that are just playing around with the numbers, where they are insanely leveraged against their capital, where they just play around with the numbers, because suddenly those numbers are out in the open. Leading on to that, when this kind of stuff is working, where is it going to go in terms of crypto itself, in terms of adoption in society versus other asset classes? Well, I think you will also see, you were talking about Kraken, you were talking about Coinbase. Let's even talk about the biggest player in the market, Binance. I believe that in 5 to 7 years, most of these guys are gone. Why? Because the banks, you could even take a guy like Michael Saylor, who's been such a firebrand ambassador for Bitcoin. Even he says that he believes that banks should be the ones that are the custodians of Bitcoin. Where I, on the other side, agree with somebody like Vitalik Buterin, who says, look, this is just crazy. Then it's got nothing to do with the anonymity and the autonomy that crypto is supposed to offer against a fiat-based society. But the reality of the matter is, and that's also why when a lot of people say, oh, buy Bitcoin, you're going to be independent of the financial market movements. It's bullshit, because there's so much of crypto already that is driven by money flows from TradFi. So in conclusion, if you look at that whole side of things, in my opinion, the adoption will unfortunately lead to that the crypto technology blockchain will be adopted by classic institutions, and then there will be a lot of that stuff that will continue. Whereas if you really want to learn something about crypto that's going to be interesting, you have to go down that rabbit hole that I hate, which is DeFi, because I'm not a programmer. I don't understand this. When I deal with our super mega brains from Imperial College, Cornell, those guys, all this stuff headed up by my good friend and colleague Henry Price, who's this PhD in theoretical physics like Stephen Hawking was. These kind of people are talking to you where you think you're inside some sort of a code in GitHub, and you're just like, I need a break, and then you give up. So the reality is, the interesting crypto, if you ask me, is going to be with those kind of people who are going to invent something, which will be this next sophisticated thing. Whereas the stuff that normal people like you and I don't know how sophisticated you are in this, Nick, we understand that's all going to get sucked into the classic traditional finance world. I'm absolutely convinced about that.
It's a great point. It's a great point. You're right. There's sort of like this, it's not a war, it's a tug of opinions, right? From very professional people, academics, and everywhere else in terms of like, where is this going to go? I completely agree with you. You could see it. It's publicly acknowledged that both the major government and major global banks would like to, and central banks, right, would like to control this DeFi space in a way. And from the blockchain perspective, I think you're absolutely correct. JP Morgan's doing this very quietly. They're not boasting about this as far as I know, but you're right. They quietly built everything internally and are using blockchain. And they're not the only ones. I'm sure there are many, many other banks, financial institutions, and things like that are using blockchain. I know that blockchain is quite popular in the settlement space as well on the institutional side for interbank markets in the US and things like that. Companies like Batten Systems, if you're familiar with them, that have been doing, they don't call it blockchain, they call it distributed ledger technology.
Yeah, they play the DLT card. It's very clever of them because they don't want to get, the hair into the machinery. But I can tell you, one of the top guys in the crypto blockchain space on the institutional level, Roger Wurzel in Frankfurt, who was the key guy who set everything up at one of the first crypto banks in Europe, Bank Frick in Liechtenstein. He's a very former senior guy at Deutsche Bank on their global equities side. When he set up DLT Finance in Frankfurt, everybody came knocking on his door as institutional operators, as in pension funds, as in, kind of mutual funds, whatever it might be, also for institutional traders. And they all had one mission. They wanted to cut costs because they were sick and tired of all these fees they were paying to Euroclear and Clearstream and whatever came along with that. So since then, and this is 2.5 years ago, the first time, they have been running closed emissions, where it's like for, let's say, some sort of a bond, where they knew that there were only going to be 10 takers, and the total emission was going to be 4 or 5 billion euros, dollars, whatever. And they would say, we'll take 10% of that, and we'll put that on this DLT solution, blockchain, whereby we see how this works. So we'll dip a toe in the water like that. And lo and behold, they learned pro rata. If they'd done the whole thing on that way, they would have saved somewhere between 65 to 80% on the cost versus what they were paying to classic infrastructure providers as it is in the current world. So going back to what you're saying, I think you were mentioning politics yourself before. Whether we like it or not, Trump is a very colorful character, But he has said that they want to create a national Bitcoin reserve, which they will do by instructing law enforcement to retain seized Bitcoin. And if we think about how proactive / aggressive US enforcement is via OFAC, driven by FBI, US Marshals, DEA, IRS, I reckon that they will in no time drum up somewhere between 50 to 100,000 Bitcoin every year. That's just my gut feeling.
Yeah, definitely. We're going to have to wait and see what happens with that, and if it actually gets created, and if these kind of policies actually take shape. There's a lot of anticipation, I think, for everyone in the world as to what's going to happen.
You will
in the
know
next
when
4
one
years.
you will know when one of Donald's sons, or Jared or Ivanka, although these two have been very absent recently, they arrive on the board of some sort of a crypto Bitcoin kind of organization. You know that it's coming from the White House very quickly afterwards.
Sure, yeah, absolutely. Torben, before we finish up, I wanted to ask a little bit about Dubai, where Match Liquidity was established in 2017. The Emirates' status as a financial center has continued to grow since that time, and you travel there, I travel there. We're all witness to its hyper growth as a city, as a country, and as a financial hub. Why do you think Dubai is a good bet to operate a broker or a prop firm or an institutional firm like yours?
Well, I think Dubai was a great place to operate something like a proprietary trading firm. But again, going back to when we look at the cost of setting up a brokerage in Europe, America, wherever it might be these days, the same has also happened in Dubai, because Dubai is a very attractive place. It has zero income tax, it has very low corporation tax, high standards of living. It has, for people who like the sun, good weather apart from May to September, or let's say June to September. So it is a place where people feel a lot of stuff can get done. And in general, the authorities are also very accommodating. What I'm seeing more than Dubai is Abu Dhabi. The Abu Dhabi Global Markets, the AGGM, the equivalent of the Dubai International Financial Center, as a tax-free zone that's spearheaded by the government, is the next place, I think, where things they're going to really grow a lot. And the reason why it's going to grow is simply that at the end of the day, the authorities have a vested interest in this stuff taking off. And if you look at it, I think a lot of people are of the impression that Dubai is so crowded. Let's just take an example. All the people who have a say in things at Binance, they don't sit in Dubai, they sit in Abu Dhabi. And all the movers and shakers I have met beyond the powers that may be in Dubai, I've all met them in Abu Dhabi. So I can only say that if you're asking about why is it a good place to set things up, because it's open for business as well. You deal with the banks. The banks will be strict on KYC, AML, although there have been rumors about other things. But the FATF removed the UAE from the grey list in February this year as a confirmation of that. Also, you have the confirmation that if you look at it from a time zone, geographical point of view, the UAE literally sits on the cusp there between West and East, right? If you're dealing with somebody in Singapore, Hong Kong, and if you're in Europe, you have, depending on which time of year it is, 6-7 hour time difference. If you are instead dealing also with people in London and New York, you have, a time difference that's manageable. So it is that kind of place that allows you to handle both East and West from a geographic and, let's say, a operational point of view. Also in terms of culture, it's very open. And from a doing business point of view, it's very friendly. And that's why I think that it's going to grow even further than it already has so far.
Definitely makes a lot of sense. Since we're talking about geographies, have you heard anything, or maybe you've already traveled to Saudi Arabia? I've been hearing a lot about Saudi Arabia recently, and the fact that besides UAE, Saudi Arabia might also become a financial hub, or it's aspiring to become a financial hub in the near future.
Well, what people have to remember is the United Arab Emirates is like this very small little brother or nephew of Saudi Arabia from a size point of view. So there should be no secret about the fact that the ruler of Saudi, the Kingdom of Saudi Arabia, Mohammed bin Salman, is naturally on the one side, presumably envious of how much they've managed to do. And that has naturally been spearheaded by, like, if you take the level of ambition, and I'll be straight up, about that. To me, it is incredible what Dubai they have managed to do. I remember when I was there in 2009 and they were building the metro and the whole Sheikh Zayed Road was one big construction project. And they were talking about, oh, people are going to go here. And I was like, you guys are on some sort of medical stuff that I need to try because this is never going to fly. And the next thing, they had their tough time. Yeah, they got bailed out by Abu Dhabi, but boom, the energy out of Dubai naturally also propelled Abu Dhabi up. And that's naturally what has made Saudi Arabia so envious. So to your question, I think, yeah, Saudi Arabia has got big ambitions. Saudi Arabia will deliver on them. They have also become very accommodating from a general lifestyle point of view versus how they were 10 years ago and how strict you have to live. But the canary in the coal mine on doing business, especially from a financial point of view, is, of course, one thing only: banking. How quick can you do settlements? If you're due to receive $5 million and no Saudi banks are dollar clearing banks, no UAE banks are dollar clearing banks. There are still rumors that First Abu Dhabi Bank is going to buy Standard Chartered, which is one of the very few non-US owned dollar clearing banks in the world. But this is the kind of mechanism that is determining. And if I look at, for instance, the banking relationships we have in the UAE, sometimes it works like pearls on a string, where literally settlement happens within 10, 20 minutes. Other times, it takes until the end of the day or the next day. So I think as far as Saudi Arabia is concerned, there's huge business potential there. But the key thing people really will have to test is, of course, how are the banking relationships working there, and how many questions are going to be asked to you as a business when you set up shop there.
Great. Torben, to finish up, I wanted to ask, what are the next key milestones for Match Liquidity as we head into the end of the year and in 2025? What can we look forward to?
That's a good question. I think, first of all, going back to the whole crypto thing. So next week, I'm going to Sigma Malta, which is this big iGaming online gambling industry. Why are we, as a market maker for the financial industry, going to an online gambling conference? Well, as talked about on crypto, 95% of crypto is a little bit of, different kind of unusual things. And one of the best places you spot that, together with also spotting new trends in finance, payments, crypto, whatever it might be, infrastructure, is actually I learned by coincidence 2 years ago at these online gaming conferences. Why is that? Because nobody's got the kind of profit margins that these guys have got. So I, for instance, have the opportunity to speak to some of the senior people from the YOLO group, which is out of Estonia, who are the main bankrollers of Ton Coin and people like that. And these guys, they're not afraid of writing a $2, $3, $5, $10 million check for a project that most people will say this doesn't have legs. But they will say, I'll tell you what, we'll give this a roll of the dice and see if it's worthwhile. So I'm going there next week. I'm going to be I'm going to be moderator and speaker on some panels that relate to crypto. And that's going to be very interesting. And then apart from that, just closing down 2024 and reflecting upon what a crazy year it's been. 2025, what we'll have to offer, again, lots of conferences, have to decide which ones to attend or not. I find it very interesting on the crypto side that Consensus have moved out of the United States. The next year they got 2 events, one in Hong Kong. I'll most likely be attending that in February, and then the one in Toronto. Might be attending that if people are not going to get stabbed or robbed or kidnapped beforehand. So there we have that. And other than that, I don't know where 2025 will lead us in terms of match and milestones. We will most likely be looking to strengthening our distribution team any further. So if there's somebody with good qualifications who know the industry well, they're more than welcome to hit me up on LinkedIn, and we will gladly entertain them on that part. Other than that, as you said, the UAE, Dubai, growing really fast. So going to be spending a lot of time down in the sandpit and then going between Europe and Asia.
Well, sounds great. It sounds like you're going to continue to keep yourself very, very, very busy.
Absolutely. That's also why, sorry that I've not made myself available earlier, but we just had to find the right time, and I hope that this was a convenient time for you.
It's absolutely fine, Torben. I moved from New York City to Limassol, Cyprus earlier this year. I've been juggling personal work, travel, conferences for the last 6 months. So I completely understand where you're coming from. Torben, I wanted to thank you for joining us today, giving us your professional background and history, and talking through all of these various topics that we covered. And I would definitely love to catch up with you again soon in some format on Finance Feeds.
Fantastic. Let's do that, Nick. Thank you for having me on the show.
Thanks so much. Have a great day.
You too. Cheerio.
Thanks for listening to our latest Finance Feeds podcast episode. For sponsorship opportunities or to become a guest, please email us at info@financefeeds.com.